can you talk about the cash out refi option,
Yeah.
or if there will be one?
Yeah, let's talk about that because RJ brought that up. So you invest, in the Opportunity Zone Fund, and these projects are active as we just described. And these projects are going to generate income, right? So we're leasing now in Charlotte as an example. We're about 20% leased at the moment. We're generating income. So for the investor, you can expect a few things. You can expect about a 6 to 7% cash on cash return. So quarterly distributions will be delivered to you tax efficiently because we'll use depreciation. So there won't be a lot of taxable income. And then, as RJ suggested, rates are coming down. And they may come down quite significantly. And so that's going to give us an opportunity to refinance our construction financing, which we secured, which is good news, but at higher rates. So what we're going to do is refinance each project, and we're going to return approximately 40% of your original investment back tax-free. We're planning to do that in kind of 18 to 24 months. But so you will get a return of 40% of your original investment back tax-free. You'll get ongoing income distributed, and then we'll reduce taxation using depreciation. And then we intend to sell the entire portfolio, and then we'll completely exit, and everyone will enjoy a significant return, a big lump sum payment. And remember, that will be tax-free. No capital gains tax associated with that sale.
Right. And the idea with that refinance is that you'll be able to provide back cash back to the investors. If it's 40%, it should be enough to cover any tax liability that they have to pay April 15th, 2027. Right. If nothing gets extended, they'll have a nice chunk of money to pay off those taxes while still keeping their original basis, their original investment in the fund working for them. And that's what future returns, future distributions are all based off of.
One of the things that over the years, I like to ask, and if you don't mind, I might put you on the spot. How much of your own money, Jeff?
Suffice it to say, I'm invested in every project we have ever done. And that's well over 7 figures of my own capital. And by the way, it's capital gains. So I am co-invested, what we call pari passu, with every one of our investors, meaning I have the same terms as everyone else.
Can you share a bit about your track record prior to this fund, just with Pinnacle and other OZ projects that you've done?
Yeah, what we did notably, if I may say, is during the Great Financial Crisis, GFC, we started acquiring land here in Seattle, Washington, at literally pennies on the dollar. We felt we had a bullish investment thesis that Seattle, given its certain attributes, would rebound and return to prior highs. That was our supposition. It took time to accomplish that, but indeed we did. We were a distressed land fund offering investment to principally, high net worth investors. So we acquired about $65 million of land. We went vertical on that land. We delivered multifamily solutions. And we got the benefit of a burgeoning company at the time called Amazon that went from a singular corporate headquarters on the Hill to this sprawling urban campus throughout Seattle. And I'm sure people have seen images of it. And our properties were adjacent to about 17 million square feet of Amazon office. So we began that fund in the Great Recession. We top ticked the market in 2017, at least we thought we did. We sold the entire portfolio. Everyone was handsomely rewarded. So we're really good at sourcing projects. We identify dislocations. In this case, we identified a compelling tax legislation that we could execute and exploit. And we're very, very good at managing assets on behalf of our investors. And we've taken that through to Pinnacle's OZ funds. And the flagship fund, although This is Fund 8, and we've done 13 other projects. This is our trophy asset, the Fund of 4.
Jeff, I've got a question for you, and that is one of the things that, of course, someone who would be investing in this opportunity zone, the Fund 8 with Pinnacle, they're going to be deferring some gains that they have from their project, their sale. Now, one of the things is they don't have to put all of their proceeds into this fund. They're going to pay some taxes if they don't, but if they want to, they can just sliver off. So what's the minimum investment that Pinnacle 8 is accepting for the project?
The minimum investment, as we've organized with SLY and Access Capital and available to URJ, is $100,000 of capital gains. I can tell you, not that you didn't ask for, but we have some very, very large investors who have allocated $20 and $30 million, if you can believe it. We enjoy co-founder of Costco, by the way, a San Diego State graduate, who is a very large investor with us. And so anyway, we range between 100,000 and 20 plus million. And we care for every investor the same, and everyone has the same, as I said earlier, including my own investment. RJ, you had asked the question. I'm invested substantially in every project. But I'll stop right there and answer your question. It's a $100,000 minimum.
And I see that there are some questions having to do with how do you source your projects, what are you looking for, and whether these are all rentals or any of them for sale.
Okay. Yeah, great question. Thank you for that. So we identified these 4 markets because of the economic resilience being demonstrated in Denver, in Charlotte, in Nashville, and Phoenix. We also like the jurisdictions, meaning city or the county in which these projects reside. The government is quite supportive of permitting, of development. These are all rental projects. So we are offering for rent homes in the 4 locations. We will sell them after approximately 10 years where we have performed demonstrably, and we believe an insurance company or life insurance company or pension fund will be very interested in the portfolio.
And then there's a question on timing, and it was, is the timing similar to a 1031 exchange?
Great question.
And in some cases, yes, but there's a big differentiator.
Yeah.
You want to talk about that, Jeff?
So you have 180 days from the realization of the gain to invest in an opportunity zone. So if you sold real estate or equities, you have 180 days, which is why people are today, as we speak, actively evaluating their 23 taxation and seeking to mitigate those taxes. So let's just say you sold something in October. I guess we could go 179 days backwards. I don't know what that date is, Sly, if you can help me with that calculation. But nonetheless, if you had a transaction in the last 180 days, and let's assume it occurred in 23 and you now have a 23 tax obligation, you can invest today in an opportunity zone and mitigate that tax in 23. But the key is 180 days from the realization of it.
And the difference with the 1031 exchange there is you still have that same 180-day deadline. However, there is no 45-day identification deadline.
Right.
So what we've also seen are a lot of those potential 1031 investments, because you couldn't find a property that you liked, you couldn't identify something within that 45 days. Now you're no longer able to execute on the 1031 exchange. You can still defer those capital gains with an opportunity zone under that same 180-day deadline.
That's right. We do. By the way, we see a lot of what we call busted or broken 1031s where people come to us. I got 5 days remaining. We are an option.
What about if someone needs their money out before the end of the 10 years? And you may have already covered that, and I apologize if you have, Jeff.
We did not cover it. It's a very good question. So we talked about the return of 40% of your original investment and ongoing cash flows. We really discourage the the redemption, so to speak, prior to our sale. So we really want people to be invested and patient with their capital while we seek tax exemption. That's our overriding goal, and everyone's primary objective is we want tax exemption status. So to do so, there's a prescribed holding period that we all need to be obligated to. But if somebody's under
So just to
hardship,
clarify,
we'll make a special consideration, of course.
okay, so to clarify, and thank you, you anticipated my next question, and that is, if there really is, as there's a saying, that bad things do happen to good people. And so we just want to make sure that they leave their money in there as long as they can to get the tax benefits. But if something truly cataclysmic happened, there is some sort of a secondary market that they could get their funds out.
Yeah, that's true. We'd make every accommodation to respond to that circumstance.
Can you piggyback 1031 along with opportunity zones? And I think you've addressed that already. But if someone doesn't identify that when they make their sale, if they've not identified that it's a 1031, can they go back and reconstitute it as a 1031? I don't know the answer to that.
Sly, I think we're going to kick to you. What do you think?
Well, I think it's very similar to what we were just discussing. If you have a situation where you're now beyond your 45-day ID deadline on a 1031 and that's no longer an option for you, then the opportunity zone is still available to defer those capital gains. So it really acts as a savior to, as Jeff put it, a busted 1031.
That's right.
But the 1031 would no longer be an option for them if it's past that 45-day window. So this is
correct. And that's one of the limitations of the 1031 exchange is you have those very strict guidelines, both the 45-day and 180-day deadline. You have to be very specific about how you even name those replacement properties. And oftentimes that potentially gets messed up. And with an opportunity zone, it still gives you that time to defer those taxes because, of course, we don't want to get hit with that big tax bill.
Yeah, and my experience over doing this for decades now is that it's seldom just one great idea. It is usually a composition of two, sometimes even three different strategies married together. Certainly, the bigger the sale event, the more tax that we're trying to defer, then the greater the need for having some variety of strategies to put together. Well, with that, is there anything else, either Sly or Jeff, that I've not asked you that you'd like to identify, or is that about it? I think
we've covered a lot of ground, and we look forward to engaging with any one of your clients, as RJ, you and I have done previously, on a situational basis. I see some comments and some questions related to first responders and teachers, and we talked about gentrification and housing for the broader workforce. I mean, we can get into many more discussion topics in a one-to-one, and we look forward to that. We hope we've provided you education around the most tax-efficient legislation ever enacted, and something you should consider if you're generating capital gains or have generated capital gains. We talked. It is seasonal in that tax planning is before us, and so we have. RJ, we were just talking about how to mitigate taxes in 23. That's an active discussion we can have. And I've really enjoyed the conversation and the questions presented. So thank you for the opportunity.
My pleasure. So if there's some questions that you've got, we're here to help. And we offer a 20-minute complimentary conversation, just whatever your situation is, not only just the sale or mitigation of tax on the sale, but maybe you've got some estate planning questions, or maybe you've got some retirement questions. We have a new book coming out that is Radical Retirement Roadmap, and it's got some exciting materials in there that you might want to include. We are now going back to put in a chapter about opportunity zones, because this is truly such a significant idea and strategy that is underserved in terms of Americans waking up to this benefit. So again, thanks to my friend Sly Pusiri, who sat me down, got me smarted up, and especially thanks to Jeff Feinstein with what you're doing to make a difference in the world in a lasting positive way. So with all that, from Wealth Legacy Group, RJ Kelly, our team here, We want to say blessings on you and be a blessing in turn to others.
Thank you so much,
everyone.
RJ. Thank you, Jeff.
Thank you. Bye-bye.